There are two main types of student loans: federal student loans issued by the U.S. Department of Education and private student loans. Both differ in interest rates, eligibility requirements, loan modification options, and forgiveness programs. Although federal loans have more flexible payback terms, if you exhausted all other choices, a private student loan can help cover your school's complete cost of attendance. Use our top student loan guide to locate the best lenders to help you achieve your higher education goals. A student loan is an excellent option to finance your college education. In college, there is no shortage of expenses. Get the assistance you require with a student loan. My name is Wade, and welcome to the Business Snap channel. Please subscribe and like this video, and don't forget to click the bell notification. Number 1. College Ave, best overall. We chose College Ave as the best overall lender because of its diverse repayment alternatives, which are uncommon among private lenders, as well as its low fees and no prepayment penalties. College Ave Student Loans provides fixed and variable interest rate loans to students and parents, as well as student loan refinancing options. To be eligible for a College Ave private student loan, you must be enrolled at least half-time at a degree-granting institution. This lender, on the other hand, requires all applicants to have a legitimate U.S. Social Security number, including international students, who must also apply with a verified cosigner. Students enrolled at a recognized institution can apply for $1,000 or up to the whole cost of tuition at the school. Undergraduate students who want additional funds may apply for College Ave's multi-year Peace of Mind loan program. All subsequent loans, however, must be submitted with a cosigner in order to be authorized. College Ave gives students several repayment alternatives while they are still in school, including interest-only payments, full principal and interest payments, and flat $25 monthly installments. There are no late fees, application fees, or origination fees charged by the online lender. Borrowers are also not penalized for repaying their debts early. Borrowers might choose to join in automated payments and receive a 0.25% reduction. Here are the pros and cons. Number 2. Sallie Mae, best for graduate students and non-degree granting school. Sallie Mae was chosen as the best option for graduate students due to its graduated repayment program, which allows borrowers to make interest-only payments for a year after graduation. Parent borrowers, as well as graduate, undergraduate, and vocational students attending non-degree granting schools, can apply for Sallie Mae loans. Is also one of the few lenders that offers student loans to part-time students. If you are attending a non-degree granting institution, Sallie Mae's Career Training Student Loan offers attractive fixed and variable rate loans with no origination fee or prepayment penalties. Fixed-rate loans have APRs ranging from 6.62% to 13.83%, while variable rate loans begin at 4.12% and can reach 11.52%. Additionally, they provide a multi-year advantage for returning students, allowing them to continue borrowing year after year if they meet credit and income requirements. It's worth noting that having a cosigner increases your chances of acceptance greatly. As a Sallie Mae borrower, you have the option of making interest-only payments, making fixed monthly payments, or deferring payments while in school. You can also earn a 0.25% interest rate reduction if you join an autopay, as well as the ability to enroll in the graduated repayment period for any loan. This program allows you to make interest-only payments for a year following graduation, while transferring from school to your new profession. Sallie Mae loans are all 100% coverage, which means they assist finance all of your education-related expenses, such as travel, tuition, housing, books, fees, and your laptop. Here are the pros and cons. Number 3. Credible, best for parents. Credible was chosen as the best option for parents since it allows borrowers to compare parent student loans from different lenders and pre-qualify without a hard credit check. Credible is a free online marketplace where you can compare private student loan rates and terms from multiple lenders at the same time. The platform includes a pre-qualification tool that provides tailored rates to potential borrowers. When you request customized rates from Credible, the platform will perform a soft credit search in order to give you a list of student loan offers that fall within your budget. This investigation will have no impact on your credit score. To qualify for a loan, most Credible partner lenders require a minimum credit score of 680. Furthermore, for people with excellent credit, student loan rates may begin at 2.94% fixed annual percentage rate and 0.94% variable APR. Because this is a market-specific programs, APR rates, terms, and conditions varied depending on the lender you select. One advantage of using Credible to compare lenders is that it does not work with lenders who charge origination fees or prepayment penalties on student loans. Here are the pros and cons. Number 4. SoFi, best for no fees and discounts. Because of its absence of fees and exclusive rate savings, we chose SoFi as the best for no costs and discounts. When you apply for SoFi student loans, it examines your work history, cash flow, and financial responsibility past. You must also be enrolled at least half-time in a recognized 4-year degree-granting institution to be eligible. As a SoFi member, you'll have access to partner-provided advantages, such as a course or a personal financial fundamentals specialized course, Grammarly Premium access for 3 months, and Best of Evernote access for 6 months. Bear in mind, these advantages are not available to Ohio residents. SoFi provides various repayment alternatives for all student loan borrowers, including unemployment protection for those who lose their job through no fault of their own, and whose loans are outstanding. Interest will accrue during each 3-month term of forbearance, but you can make interest-only payments during that time. Deferred payments for 6 months after graduation, interest-only payments throughout school, fixed $25 monthly payments during school, and full monthly payments after graduation are all options. There are no application or origination costs associated with your private student loan with SoFi. There is no prepayment penalty. Furthermore, SoFi borrowers can receive exceptional rate cuts of up to 0.25% if they enroll in automated monthly payments. Here are the pros and cons. Number 5. Ascent, best for borrowers without a cosigner. Because of its dedicated non-cosign loan for both DACA and international students, we identified Ascent as the best for borrowers without a cosigner. Ascent is one of the few private lenders that offer a loan program based on academic performance, school, program, and major. It's also one of the few lenders advertising no cosigner student loans for DACA students and overseas students, as well as personal loans for financial aid professionals. The non-cosigned outcomes-based loan from Ascent is accessible to undergraduate juniors and seniors who do not have a cosigner and do not fulfill minimal credit criteria. This loan is intended for recent graduates with a minimum GPA of 2.9 who are preparing to enter the job. If you have school loans as a junior or senior without a cosigner, you can only return them after you graduate, with loan periods ranging from 10 to 15 years. You must be enrolled in school at least half-time to qualify for loans that do require a cosigner. Deferred payments up to 9 months after leaving school, $25 monthly payment while in school, interest-only repayment while in school, and forbearance and deferral options ranging from 1 to 36 months are available to Ascent borrowers, depending on the type of loan. There are no origination application, disbursement, or prepayment penalties associated with undergraduate or graduate private student loans with Ascent. Customers can also request for consignor discharge after 24 consecutive on-time payments with Ascent. Other benefits include a 1% reward and a 0.25% discount on automated debit payments. Here are the pros and cons. Number 6. LendKey Best Marketplace. We chose LendKey as the top marketplace because, despite working with a broad network of lenders, it serves loans on its own and has its own customer support. LendKey is a loan marketplace with over 13,000 community banks and credit unions as partners. If you prefer to work with local lenders and co-ops, LendKey may be an option for you. Unlike other marketplaces, services loans and provides in-house customer care. That is, partner lenders make loans through LendKey's automated digital platform, while the company handles customer interactions, resulting in reduced rate offers for qualified consumers. Their loans can be used to pay education-related expenses that have been certified by your institution. Room and board, tuition fees, transportation, laptop, and textbooks are all included. Rates and periods may vary greatly because LendKey works with community banks and credit unions. In order to qualify for their student loan products, some financial institutions may require you to complete additional loan eligibility requirements. Because applications are credit-based, you must be prepared to have a cosigner if you do not fulfill the eligibility standards. Proof of income, permanent address, or Social Security identification are examples of supporting paperwork for cosigners. You must be a U.S. citizen or permanent resident, of legal age in your state of residence, and enrolled at least half-time in a degree-granting program or recognized institution to be eligible for a private student loan with LendKey. Fixed or interest, only repayments while in school, as well as up to 6 months of forbearance, are available for LendKey student loans. LendKey, as a marketplace, provides private student loans and refinancing with no application or origination costs. Here are the pros and cons. Let me tell you how do student loans work. Student loans are provided by the federal government or commercial lenders to find a way to pay for undergraduate or graduate study. The loan is used to cover tuition, books, student housing, and other educational costs. When a student loan application is approved, payments are transferred immediately to the school to cover tuition fees and on-campus student housing. The student receives the remaining sum. Private loans collect interest from the beginning, whereas federal loans have more adjustable periods. Repayment may begin after you graduate and find work, or while you are still in school, depending on the loan type.
Thanks for watching. Please subscribe and press the bell icon to get a notification. Business Snap. Finance and investing updates.